All right, just give a moment. We'll get started.
Vivek, sorry I missed you last week.
Yeah, I, I figured that you got some better things to do. So don't worry.
Oh,
No worries at all.
Vivek, it was a lot worse, believe me. It was not better.
Okay.
Think
All right. All right. So, who do we have? We'll get. Okay, I'm seeing some new names out here. Let me just share my screen. Okay. All right. Looks like we are all set. All right. So what's on your mind? What do you want to talk about today? I have a bunch of topics.
uh
Um,
thank you for your dividend courses.
oh, you're welcome. So which one did you pick up? Did you pick an ETF or what?
Oh, excuse me. It's starting next week on Wednesday, right?
Oh, that options.
Yeah.
Yeah,
Sorry.
yeah. So yeah,
Yes,
eventually
thank
I
you.
gave in. You guys have been asking with like multiple times, so I thought, okay, let's do it. Let's do it. We just were trying to figure out the time that would work out. So I told my daughter Wednesdays, I'll be busy from 6 to 8. So no carrying her around. Yeah.
Uh
So,
Kai
we'll
is
talk
also
about it.
doing one on Thursday.
Sorry.
Kai, is his name Kai? Kai is doing one on Thursday. I don't know
Okay.
why. Yeah, okay, later.
Okay. Yeah, Adam. Yeah. So what do you, a few things that I had in my mind in terms of what I want to talk about is definitely around gold. We are seeing a lot of, movement in gold. And let's pull up GLD. And as you can see, GLD is like through the roof. We haven't seen these movement in gold for quite some time. I think last probably was in 2012 or something. Look at this beautiful chart on gold and what close to 180. From let's say in mid of Feb all the way to actually hit 225. On Friday. So what's driving all this? So we will talk about the goal, the 5 Ws, right? So I think some wise person has said that if you want to understand anything, you need to ask, 5 Ws. Who is buying it? Why they are buying it? Where they are buying it? When they are buying it? And there was one more W I forgot. So we'll walk through that. There was a good article on Bloomberg that I read through. So that's what I'm going to go through. So that's one. A couple of letters coming out from CEOs. So we're gonna look at a letter from Amazon CEO. So I went through that letter, present you with a summary of it, what Andy Jassy has to say. There's a Piper Sandler report of around what teens are doing, right? So teens are the next big section of consumers, and every company, many of the companies that we want to invest in are focused on teens. So want to see what that report says, and want to dig deeper into PayPal. So yeah, that's those are a few topics I have. And of course, a little bit to look at what the market is doing and other stuff. What do you guys have in mind? We have a 2 hours, and hopefully we'll be able to finish in 2 hours. I really want to, I got some stuff to do, so I want to cut the call at 2 hours and not go like 2 hours, 30 minutes, 40 minutes. So,
Uh, Vivek, when you get a chance, would you walk us through how you evaluate the stock price for the particular company? I know we briefly talked about it in last two sessions, but I would like to see how you evaluate the company and then you get confident about, okay, this is the price I would like to pay for this company.
sure. Yeah, so I generally I'm not too keen on the pricing side. right? As long as it's not really egregious, but I am more keen on the process of evaluating a business, right? So yeah, so some session, some whatever time we can devote some time on how do I evaluate a business? Because one thing I've seen is a good business is never, most of the time it's not available at cheap price. So you actually have to pay up. And because there are ways for us to reduce the cost basis of ownership, I actually don't mind paying up for a business, if the business is great. So
Yeah,
that's,
that would be awesome. Thank
yeah,
you.
sure.
Yeah, that session would be awesome. Thanks.
Yeah, that's what I focus. And yeah, that's what else? I see some new names, or maybe my apologies if I don't recognize, if I didn't recognize in some of previous session, but I see Daryl on a cloud.
Yes, hello. Yeah. No, it's my first time. I just wanted to see what kind of education process you offer on stock options because I've been trying to trade stock options for probably a little over a year now.
Mm-hmm,
I'm still learning. I mean, unfortunately I've had more losses than wins,
mm-hmm,
and I have a strategy, but it needs refine tuning. I would say my biggest problem right now with putting in trades for stock options is timing.
mm-hmm.
Especially if I go down to the minute chart. I told myself like I'm not going to do the 1 minute chart anymore. I'm gonna start trying to do the 5 minute because I'm noticing the 1 minute is just too much noise.
Mm.
And that messes with my psychology. So now it's like, okay, I got to start trading the 5 minute. But would you recommend the 15 minute or the 5 minute is good if I'm going to do a call or a put?
So I deal in option in a completely different way. Uh,
Okay.
my focus, and I've been doing it for now 8 years. My focus has been to use options, but in a way in which I don't have to babysit my trade. So I don't
Mhm.
even look at a minute chart, 15-minute chart. I only chart I focus on is 1 year, 1 day chart. I'm mostly option seller. And
Okay.
I don't do anything which is gonna expire in next week or so because
Oh,
my
okay.
focus is I've been doing this along with my job. So I'll spend mostly maximum an hour in the morning before the meeting starts to kick off. The office work starts, and maybe I look at it near the close of the market. So I
Oh,
don't. So I'm a very different type of
got you. Yeah.
way to use options.
I've noticed like with me right now, I'm mainly doing scalping. That's the kind of trades that's my strategy right now,
Got
scalping.
it. Yeah.
But eventually I want to go into like long-term trades and stuff like that,
Yeah.
hold a position over a week, over to even to a couple months.
So
But just like day trading, like scalping.
okay. So no, I've never done gamma scalping because you rightly said you that will need you to watch your trades really carefully. And I don't have a time because at least I'm not a full-time trader. So I use mostly options to as a part of overall investing, I would say process. Hold good, great stocks and use options to reduce the cost basis. So I'm gonna talk about how I've been using options on specific sessions, which is specifically focused on options. Anyway, I think I'll probably review that once we get into the session. So thanks for joining in. Who else? I see rather new name Vishal.
Hey,
Hey Vishal, what brings you here?
yeah, so I'm just generally interested in investing. I'm a novice investor, haven't invested a lot. Like I have invested, but it's purely based on sentiment. So I just wanted to, yeah, get into the game. That's all. So
Oh, great. It's never too late to invest. So welcome.
thank you.
Yeah. If the best time to invest was yesterday, the second best time is today. So what kind of I mean, like Daryl mentioned, he is mostly, I would say, a day trader, not even a swing, but he holds positions for a very small period currently. What kind of investor slash trader are you?
I buy individual stocks over long term.
Okay.
So mostly been investing in big tech. Last year, or I think in 2021, when the SPAC was a thing, I invested
Mm-hmm.
in a couple of SPACs, got hurt pretty bad on that. So yeah, I've been just buying companies based on the value.
Got
That's
it.
all.
Okay. Yeah, so that's what my focus is. And believe me, you're not the only one who's got burnt in SPAC. I've been doing this for almost 4 years, and I've seen many of us, come and go, and some get burned by SPAC. Some, we picked up some companies that were super overvalued during 2021, right? Like trees grow to the moon kind of stuff. But yeah, those are lessons learned. Everyone has to pay tuition fee to the markets, and
Yeah.
I've
And
paid mine. And I guess, without paying that fee, we don't really learn.
okay,
So
on top of it, I think SPAC marketed very well. We are all part of that marketing team.
yeah. So cool. Good that you joined. David, I don't know if this is the new David or the David who has been on this for like for years.
Oh, I'm a new David. Yeah, so I joined last week for the first time.
Okay.
So I'm new at this. Maybe for the past couple of years, from time to time, I've used like apps like Robinhood and just kind
Mhm.
of, bought what I thought was good at the time based on some analysis I did. But I finally got some money in the bank account, and my first strategy was to move it to the highest yield savings account that I could find.
Great.
Um, so that was my first shot, but now I have a full-time job, so I'm looking into getting into swing trading, learning how to use options, come up with the strategy as well as just long-term trading. So, like I mentioned, I have the high yield saving account. I've been looking at bonds, trying to
Mhm.
figure out whether that's a good option or not. And yeah, and that's basically where I'm at, just looking to learn more and become a little bit more mature with this.
Cool. Great. Welcome. Let me see. Uh, who is new here? Not sure. I see a name L. Not sure it's the first time or probably uh been heard. Okay. Okay, Luna. All right. Welcome, Luna. Okay, so I think everyone else I at least recognize the name. All right, so UFB offers 5.25 APY, Wealth runs 5.5 with 3-month promo. Yeah, so David, like you mentioned, you have your money in high yield savings account. I would say you are ahead of 50% of the people. I think it is like 3 or 4 sessions ago. I was I, I I talked here. I was helping one of my, a friend um in because he's never looked at investing. So he was like, hey, you do this thing, can you help me out? And he had 7 figures sitting in checking account. Can you believe it? I'm like, What are you doing?" He says, he's never looked at it. And like, okay, go to your bank, figure out high yield savings account, move with your, if even if are not comfortable with the stock market, that's fine. Let's put it in a CDs. Now you're gonna have a CDs which offer 4.5%, right? So so I so even if you've been able to figure out that, hey, I can move money into high yield savings account, that's a step number one. So it's a good job over there. Okay. All right. So I guess let's get going. Other people will join in when they can. Generally, by this time we have more folks in here, but I guess, at least on Bay Area, we're having some spring break for some schools. So I guess people are probably traveling, which is great. So let's get going. All right. Quick disclaimer, we have a new people, so anything that we talk here is not an investment or financial advice. So guys, just don't buy a stock because you heard someone on a Zoom meeting talking about a stock. Okay, do your own due diligence. And I am not from a financial services industry. My background has been mostly in the technology sector, and you don't want to take investment advice from a tech folks. We are the worst ones, like engineers. Anyway, so Let's first close out on some of the questions that was asked of me in previous session. So in last session, we reviewed the annual letter from Pershing Square Capital, and I think a couple of you asked for, hey, what was can we look into why did they invest in Chipotle and restaurant brands? So here's what Bill Ackman has to say about Chipotle. And if you recall, Bill Ackman went huge. I think he went very big in Chipotle. Anyway, the kind of a hedge fund investor he is, he hold very concentrated positions. He always, pick up 7 or 8 stocks, will go big in that. But when Chipotle had its health scare a few years ago, Bill Ackman picked up, he really picked up a lot of a huge position and has been kind of a champion for Chipotle. So same store sales grew 8%, which is a 42% from 2019. And his idea of investing in Chipotle is still serving higher quality food at but cheaper price. From economics perspective, 230 bips of restaurant level margin expansion in 2023. So restaurant is a very difficult um, a very difficult business to actually make money in. And I don't know, but it's a very attractive business for a lot of folks. Um, I know a few of my friends who have uh, either already opened restaurant or have tried their hands in restaurant business, or they have a dream of once I'm done with my job, I want to open up a restaurant. But restaurant generally is a very low margin business. It mostly works on volumes. Higher margin only if you get onto Michelin, some Michelin star rating. Otherwise, it's a low margin business. So looking at 230 bips of margin expansion, I mean, that's amazing. And again, he sees significant opportunity to still improve in restaurant execution. Chipotle Lane, which is their drive-in, which they introduced near COVID. That's done great for them, but there is still some improvement required in store. So why still holding Chipotle? We believe Chipotle is in early innings of a decades-long growth story, right? And if you look at CMG, that stock has been on tear for, let's expand a little bit, go out 5 year, right? So stock is now, it hit more than $3,000. And if I go a little further down, maybe 10 years, where is 10-year one day? This is where you had that health scare, right? Some rats were found in Chipotle restaurants and the stock fell down. Stock was almost $400, 380, and then fell down to 250. And now, and this was 2018. Now, 5 years later, or maybe 6 years later, yeah, it was Feb 2018. So 6 years later, from close to 250 to 3,000. I would say that's a pretty decent return, right? And yeah, those who bought at 250, congratulations. We got another opportunity right here. And if you're like me, you've been just watching it. I never got into Chipotle and become so difficult now buying at 3,000. If you've not bought it at 250 or you've not bought it at 500, mentally it becomes very difficult. So yeah, I'm still watching it from the sidelines. But do we think, is it done? This is what Chipotle, 3,000, there is no more growth. Look at how, let's see what's the Chipotle's market cap is. CMG. It is still less than $100 billion company. Right? And if we can figure out the rest of the how big is McDonald's? MCT. Almost, it's more than double of Chipotle. Right? So clearly there is a lot more room to run, right? And again, I have not done a build investment thesis on Chipotle. I'm just seeing what Bill Ackman has to say. So he still thinks that it is an early innings of a decades-long growth. In North America, the management expects to grow its restaurant at a rate of 8 to 10% per annum. This is more than the inflation rate, with a goal of more than doubling the store base to at least 7,000 locations. Right. And number two, international is still an untapped opportunity, with the company just beginning to increase its investment in Europe, and now they have their first ever franchisee in Middle East. So they're now breaking into Middle East area and expanding in Europe. In addition to opening new restaurants, Chipotle's many growth opportunity exist in their current restaurants, which include revitalizing the menu, adding some new things in menu, and loyalty programs, and long-term potential to offer breakfast and leverage automation technology to simplify operations. I know they already got some robots to peel avocados, but probably they can add more into automation. But yeah, I think the menu innovation is still there. They don't offer breakfast, but they could add all those things. So, and again, this is Bill Ackman speaking. This is not my thesis. From Bill Ackman perspective, hey guys, we're just starting off. So it doesn't matter whether the stock moved from 250 to 3,000. The notional price of stock doesn't mean anything when it comes to investing. Even though if you are new to investing, I hear people talking about, oh, the stock is expensive because it is $800. And $200 is not expensive. I would say flip it around. A $2,000 stock could be cheaper than a $200 stock. It all depends on the business and what's its valuation is. So not to get scared thinking that 3,000 is expensive, but if business could continue to grow, maybe 5 years down the line, we might be looking at sitting here and thinking, oh gosh, that was a good price point to buy. Again, I'm not recommending this to buy, but this is what Bill Ackman has to say. Okay, so that was on Chipotle. Hopefully, whoever had asked that question, if you have anything else, let me know. So second question was on QSR, which is a restaurant brand, and why did Bill Ackman in restaurant brand? So let's see what he has to say about his investment in QSR. It was the first time I think I even tried to figure what is restaurant brand, which brands does it have, right? And then last week we looked at actually it holds some known brands like Burger King, Tim Hortons, and Popeyes. These are part of restaurant brands or QSR. So why is Bill Ackman in this? What does he has to say about it? QSR, it's franchisee business model, high quality. It's a high quality capital light because it's a franchisee model, growing annuity. Whether you make money or not, you basically franchisee model is you a kind of whoever is running the franchisee, they basically pay you whatever a set percent of the revenues because you are sharing the best practices. You set up the system and then you rake in kind of a loyalty or annuity. You keep the money coming in. So that's a high margin brand royalty fee from four brands: Burger King, Tim Hortons, Popeyes, and Firehouse Subs. I think I've never been in Popeyes. Anyway, so in February, the company hosted an investor day, introduced 5-year growth outlook comprising 3% plus annual comparable sales, 5% plus net restaurant growth, driving 8% system-wide sales and operating income growth. Right. So when it comes to the restaurant, 8-10% growth is great. Generally, you won't see it growing, too far beyond inflation. So when we are saying that Chipotle is planning to grow between 8 to 10%, that's a good growth. I can't say the same about, let's say, software companies, right? But when it comes to restaurant, 8 to 10% growth is a good growth. And in this case, they're actually talking about how are they gonna grow it, right? Two ways to grow it. Number one is grow the existing business, which is 3%, growing from your last year sales, and add in more restaurants, grow your restaurant, that will bring in additional 5%. So that will give you overall 8% growth. The company also updated investors on the franchisee profitability with significant improvements in each of its brands, including nearly 50% increase in franchisee profitability at Burger King and 30% at Tim Hortons in Canada. Right? So profitable franchises are happy franchises, and you need your franchisers to make money. Otherwise, why would they be with you? So Burger King looks like they had a turnaround. In US, it is still underway and it poised for acceleration. Comparable sales in US improved each quarter during the year, despite the majority of 400 million Reclaim the Flame program yet to be spent. So looks like maybe Burger King had instituted a program to improvise its operations and turn around its business. So it looks like they had allocated $400 million. So even they haven't spent it, they still started to see the improvements through that plan. What else? They so the company also revised how they report, and they start providing standalone financials for its international business. Right. So the only reason company will break down certain segments is if the segments are supposed to do better than the overall company, right? I have not seen any company which will, break down a particular segment, which is actually doing worse, because no CEO or CFO will want to upfront offer information which is not good for their stocks, right? You have to really dig into their reports to figure out where the gotchas are. But they do want to provide a financial for standalone financial for international business, because that's a crown jewel. It's got a lot of opportunity coming up for in their international. The sales grew 18% in 2023. So it makes sense to separate it out and show its financials separately from their North American business. And operating income growth of 15%. So looks like international is doing good, and that's what I want to separate it out, show it, and get some more brownie points from investors. So despite economic weakness in China, that's not hidden. That's what, if you look into the Chinese stocks, those have been like one of the worst performing stock market in the world. And China being second largest economy, the market has been down in the dumps. So if you hold some of these Chinese company stocks, even if you don't hold individual stocks, but if you hold ETFs, pick up any FXI, CHI, KWeb, all those stocks are very bad, right? And that's because the whole growth story of China didn't really pan out. The property market rout in China is causing a lot of concerns. So most of the companies that have a business in China see their weakness in their Chinese business. So same case here, but despite the weakness in China, we expect unit growth will be higher in 2024 than 2023, and eventually return to company's historic 5% growth. So currently they're looking at 3% growth. If China, becomes, the economy starts to become better in China, they might even reach out to, 5% growth rate. While QSR has made substantial progress across all its brands, still trades at a discount to its intrinsic value and its peers, which have a long-term growth potential. So looks like they have already looked at the intrinsic value, means what the business has grown and what the business is worth, and market is actually treating and trading the stock at a discount to the intrinsic value, and hence they are in this position. So that's a couple of stocks that you had asked, hey, can we talk about this? I know last week we looked into why Bill Ackman was in Google, but you guys wanted to talk about QSR and Chipotle. So you gave me the homework, I finished the homework. So that's on the QSR and Chipotle. All right. And I think there was one more question, which was you had asked when we talked about option boot camp. You had say, hey, how do we get a higher privilege if you're enabling your option trading account? And I couldn't figure out where my video was, and this is like a few years old video, but later on I was able to figure out. So before you go, and if you have not opened your options account yet, and if you want to attend the boot camp, I would suggest go and enable your account for options, because otherwise you won't be able to follow along on the boot camp, which I'm going to talk about. Where's my option? Oh, okay. So let me just, yeah, mention about the boot camp also. But before you enable it account for options, watch this video in which I had covered how to, why they ask you certain questions, and based on answers to those questions, they will give you the level of a privilege which will allow you to do certain strategies in option trading. I can't recall who had asked me this question, but here you have this. So this is the link to the video. So now talking about, okay, I don't have. Now talking about the boot camp. So for those who are joining here new, or maybe if you missed out last week, so I'm gonna like this is the 5th edition. I'm now, after 3 years, I'm gonna do another boot camp on options, which is basically focused towards how to use options as along with your regular day job. So I'm not gonna look at, any strategies that would need you to babysit your trades. But what we're gonna do is go through the very basics of options. What's our calls? What's our put? What puts are a newbie option trading strategies. From there, all the way to how to manage your portfolio using options, how to do your delta hedging, how to manage option trades if those are going against you, what's the checklist for opening option trade, how you close it, how the pricing work, assignment, exercise. So if you had been trying your hands on options, if you have any questions that scare you, or you wonder what those are, bring into the options bootcamp. Few things about options bootcamp is make sure your account is enabled for options. You'll have 2 or 3 weeks to get that done, because you will have a homework, right? Saturday meeting, free for all. I don't care, what do you do, whether you're watching movie on the side, but boot camp is gonna be a little more, I would say, serious, and you'll get your homework. You need to go back and study. Make sure you do some trading in your paper account. And again, this is free to attend, but all I ask is that give me your time and energy and your passion to learn, so that it really becomes, all the time that I'm spending, I feel good about it, that okay, someone actually learned from this, right? So you'll get your homework, and before you come for the next session, make sure you do your homework. So right now, I think the plan is to have overall 14 sessions. And let me just look at the last week document. I think I I had a list of all the 14 sessions, uh, so that I can, where that was. Okay, yeah. So we'll start with, it's gonna happen 6 p.m. to 8 p.m. every Wednesday, starting from this coming Wednesday. I will start with very basic intro, call options, and then we get into, if you have a small account, what are the strategies that you can use, how to manage option trade, assignment process, how does that work? That's a little scary if you are new to the options. Then we get into a little more details of trade-offs and option Greeks, what's the impact of delta, theta, gamma, how do we incorporate these concepts when we're actually dealing in options, and then, hedging your positions, individual position, hedging your overall portfolio, and then finally, what's some of the tips and tricks that me as a retail investor, I learned over years of using options along with my job. So there are some tricks that you might find useful if you are not full-time into, if you have a full-time job and you are actually trying to use options to manage your portfolio along with the job. So yeah, so that's a overall, outline of the boot camp. So I already had created an event on Meetup for bootcamp number 1 and number 2, But what I do see is some of you have signed up for the meetup, but you will have to register for this. So I don't think that everyone has yet registered. So if you go to this, you get a link. If you click on the link, you will actually get to this registration page. All you need is your first name, last name, and email address, so that after the session, you can communicate back to me with your homework assignments. So make sure you go through the registration, then you get a link for the Zoom. Okay. Just RSVPing on to the event is not enough. You just have to register for it. Any questions on the bootcamp? All good? Time for bootcamp is 9 to 11. Yeah, I know. Unfortunately, I mean, trying to figure out one time that works for all time zone is almost impossible. So, Johnson, do I register through Meetup? No, when you, okay, I close that, right? So if you click on that link, so once you so I think even the same link is out here also. You will have to register it. If you click on this link, it will take you to the registration page. And this is a registration page. Okay. So similarly, I also scheduled drill number 2, in which we're going to talk about, monthly income strategy. I see 8 people have already said yes to it, but if you have not registered for it, you will not get the link for the Zoom meeting. Okay, so make sure you actually register for each of the drills. Okay. Anything else? Any questions for the boot camp, before we get on to today's session? Again, most of that will be focused on if you are using options along, as a DIY retail investor. It is not focused on, let's say, prop traders. It is not focused on institutional traders, or it's basically focused on the retail DIY investors. Also, if you ask me how to do a gamma scalping, probably I will not have an answer for you, because you can't do that along. It's difficult to do along with the job. Okay. All right, looks like no questions on the bootcamp. So let's jump into today's session. Let's talk about the 5 Ws behind gold. And like I said, gold has been on tear. And there's a good article on Bloomberg. I just want to go through some of the key summary points from there in terms of what's driving gold. Right? Gold have been kind of did nothing for almost 10 years, right? If you look at, and if I may take GLD as a proxy of gold, and let's look at 10 years one day. So 190, last gold was, I think, at 2012. Okay, let's go little wider. Okay. Yeah, last time we saw gold at around this was in 2011. And GLD was around 185, and then it did nothing for almost 10 years. This is 2020, and this was when we had the COVID scare, after COVID scare, and that's all. So did almost nothing for 9, 10 years. And now since COVID, since 2020, it's been just trading sideways at close to between 190 to, I would say, 160. And then suddenly in last 6 weeks, it's just shot up as if, there's no stopping it. So what's driving all this interest in gold? So let's jump into it and see what's happening. So the metal, I mean, this precious metal is seen as a safe haven, and that's why most people would want to invest in gold. And it has been trading in fairly steady range for months, as we have seen on the chart, but started spiking in early March, I would say the later part of Feb, and is up almost 14% since then. So it's year to date, it is up. It is year to date, it's up 13%, which is much better than SPY. SPY is up 9% year to date. And you don't see, these times when the gold is actually beating the stock market. But for now, that is the case. So what's changed? First of all, let's look at what the seasoned analysts and executives have to offer in terms of their explanation of who is driving all this interest in gold. Is the central bank worried about the dollar role as an economic weapon? And hence the central banks are, instead of buying US treasuries, they are actually buying gold as for the reserves. Is that a reason? Or are the funds, basically when the funds means either hedge funds, mutual funds, they are betting that the Federal Reserve pivot to lower interest rate is coming soon. And this is very different from what the stock market is predicting, right? Stock market was earlier predicting 7 cuts, then we're looking at 3 cuts, and now based on a Friday and Thursday, like maybe we'll just get 1 cut, who knows? But if looking at the gold, one reason, if the interest rates come down, then the attractiveness as gold goes higher, right? So gold is going higher. Does it mean some of the funds are predicting that we may get interest rate cuts from the Fed? Any algo traders are drawn to gold because just as it's going up, right? Those are momentum traders. Trade what's working, right? Trend is your friend. Many algorithms are based on this momentum. Are those driving it up because, hey, it's going up, and hence, they're taking positions. Is a stubborn inflation worries about hard landing, worries about that the inflation will continue to be there? Is that driving the gold price? Is it weakening currencies? Is it the elections? So when elections coming in, you have a lot more uncertainty. If there's uncertainty around, the stability of a government or geopolitical uncertainty, the gold is a safe haven, right? Investors will flock to gold, especially in the countries which don't have a well-developed capital markets. Gold is considered as a safe investment. So is there a weakening currency? Is there geopolitical risk? Upcoming elections, or is it all the above? Maybe all of them is happening in one way or shape across the world. Right? And that's driving the gold prices higher. So who is buying? In particular, central banks are buying. Big institutions are buying. Chinese consumers are worried about, the returns in the property market, because property market is deep in the hole. So Chinese consumers are buying because they're investing in gold. They consider gold as a safe investment. And, so all these have been buying gold. So looking at the central banks, so they've been boosting their gold holdings for now. If you look at 2023, past many months, this is their net buying of gold. So obviously all the central banks have been buying gold. China central bank, your PBOC, has been buying gold for 17 straight months. And the central banks are when they buy gold, they're buying like billions of dollars, right? So PBOC has been buying gold for 17 straight months, and now they have about 72.74 million troy ounces of gold. What are they buying? And looking at central banks, looking at traders, hedge funds, institutions, even retail investors, there are different ways to get exposure to gold. Either you can get directly by the physical metal. If you have a vault like we have in Fort Knox, or banks have in their in their buildings, you can buy a physical gold. Costco is selling gold, and those have been like flying off the shelf. Costco is selling an ounce of gold, I think $2,300. Last year, I wanted to buy it, but it was completely sold out. Now I'm seeing some Twitter threads saying someone is able to buy the gold from Costco. Has anyone else bought? Has anyone been lucky enough to buy the ounce of gold from Costco? So they have a very nice thin a gold biscuit. Even Walmart sells gold. You can buy it from Walmart also. Okay, in any ways, so you can buy physical gold and stash it in your bank safe deposit box, or if you have, a bigger amount, maybe put it in, you have your own personal vault and put it there. But if you're like me, then I'd rather just buy an ETF. Yeah, there are different ways to invest. You can buy the ETF that holds gold, which is GLD, or you can also get an exposure in economic exposure to gold by investing into gold miners, right? GDX, GDXJ. So there are different varieties. So another question is, we don't know who may be buying it, but what are they buying? Are they buying physical bullion, metal bullion, which you can hold in your hand, or are you buying ETF? So let's look at what are they buying. One thing that's clear and also head scratcher is investors haven't been buying the ETF. Looks like I don't have much company out here, right? One of the easiest way to acquire exposure to gold is to buy an ETF, but investors actually not buying ETF. The money has flown out of ETF, which will be difficult to think that when gold is going higher, people are not buying GLD ETF or any. There are more than one gold back ETF. GLD is the biggest one. That's why I generally talk about GLD. But if you search, there are more than this. So there is steady stream of outflow from the gold back ETF. And this is one of a bizarre phenomena that's is happening in the ETF space. But and so the only thing is, it means if the demand is not coming from the ETF, because the investors who have invested in ETF, they're selling the ETF, then the demand is probably coming from other investors who are actually buying direct gold. So let's see where the demand is coming from. Profit taking by the long-term investors who bought ETF years ago is probably now selling. And there are other investors who are buying physical gold. So that's one. And yeah, so, and the other demand is coming from the central banks, which we already talked about, who is buying the gold. So when you sell your ETF, the issuer of the ETF basically also sells the gold in the market, the physical gold in the market. And there are central banks or other investors in China who are actually buying that physical gold. So that's where the demand is coming from. It's not from the ETF buyers, but it is from the other investors who are buying physical gold. Where are they buying these things? So these things are happening in the futures market or over the counter markets, right? And all is mostly happening through the institutional investors, which is like central banks, investment banks, pension funds, sovereign wealth funds. They all are involved. And now we are seeing some options activity is also picking up. So but majority, it's the future and OTC markets. That's where most of the trading is happening. And when are they buying it? And I was surprised to see this stat that actually most of the buying is happening on Mondays, Wednesdays, and Fridays. And so there's big institutions. So this is where you see the average daily price move since March 1st. The movement is a lot more on Mondays, Wednesdays, and Fridays because a lot more demand from these big investors. I mean, okay, I shouldn't say about you, but I can't move the markets. I can't have any impact on the price of gold by buying, $1,000 worth of GLD. But if you have a central banks and sovereign wealth funds buying into gold, that's where they have ability to move the markets. And we're seeing that most of the price change, the gold happens on Monday, Wednesdays, and Fridays. And that is probably why the analysts think that the buying is happening on these 3 days. Right? Now the fifth why. Why are they buying this? Right? And why are they buying now? Some gold investors are zeroing on the prospect of hard landing, right? Maybe inflation is still high, and if you look at the CPI number that just came out, the expectation was 0.3%. We ended up 0.4%, even though it is like just 0.1%. But if you really look at a comparable percentage, it was 33% more than what the market was predicting, right? So inflation is still high. And if Fed really has to get its target of 2%, they will have to keep it higher for longer. And could that put US economy into recession, right? And again, these are all predictions. So some of those gold investors are zeroing in, saying maybe we will have a hard landing. We may not have a soft landing, right? What so far we've been able to manage. And then there is basically a spread between, you have a London spot gold and 3 months forwards. Sorry, London market gold 3-month forward and Federal Reserve rate. And it's the first time that the spread has gone negative, which generally means it's a bullish for gold. Again, this all is based on institutions who are now trying to diversify, especially central banks who are trying to diversify their reserves outside of dollar. And there could be multiple of reasons. Now we are seeing geopolitical tensions, right? The war, not the war, but I would say the conflict happening between Israel and Iran, right? Could that escalate and become a war? If that's the case, then the gold will continue to move higher, and so will be the energy prices. Right? In case of turmoil, in case of uncertainty, in case of doomsday scenario, gold is still considered as a safe bet, and that is why we're seeing gold has done what it has done. So, is it too much too soon? I definitely think so. And I don't have a crystal ball. But you can draw your own conclusions based on, some of the things that we learned, what's happening on the gold market. Any questions? What is USP for Costco gold? When I purchased Walmart gold has little. When I purchased Walmart gold has little more for competitors. I don't know. I think the only thing is the Costco probably will sell cheaper. Two things you have to make sure. One is that you're getting it from the same miner, right? There are a few places where you can go and buy the gold. If you just search for a cost on Walmart, you'll have some options of buying from miner A versus B, C, or D, and you can buy from the same one on Costco, I guess. Probably Costco will sell you a little cheaper. Or you can actually, other option is you can directly go to the website of those miners and buy it from them also. So I guess USP from Costco gold is they'll probably sell you a little cheaper than what is being sold in the market. Again, I've never been able to buy it. I mean, I don't have it. I had a need to buy some gold last year because I had to give a gift or something. So otherwise, I generally don't buy physical gold. Right? I'm an ETF guy. Who wants to worry about storing physical gold, man? That's a pain. So I don't buy physical gold. But yeah, some people wants to buy things that they can hold in their hands. They feel good about it. I'm not one of those person. I'm a ETF guy. Thoughts on interest rates cuts likelihood? I don't know. I mean, the much highly educated economists can't figure out what's how many interest rate cuts and when it will happen. So I don't want to hazard any guess. Anyone, yours guess is as good as mine. We started with economists were saying like, and we're talking about the economists of the Wall Street firms. They have access to millions of data points, and they have an array, an army of PhDs and the computer scientists to build the models. And they can't figure out how many interest rates going to happen. So it's impossible to guess. So yeah, why even go there? So I don't even want to focus on and build my portfolio assuming that Fed is going to do 4 rate cuts or 3 rate cuts or 2 rate cuts. That's I would say that's a bad way of investing thesis is, hey, I wanted like 3 rate cuts. So I want to make sure I hold the companies that will still do good even if you don't get any rate cuts. So that's all I can manage at my side. I can't predict what Fed is going to do. I can only I have my control or influence on my portfolio. So I would rather focus over there in the gosh, what am I holding in my portfolio and not waste my energy in trying to figure out what is Fed going to do. Is it going to give me 1 rate cut or is it going to give me 3 rate cuts? Guys, we in 3 months, or I would say 3.5 months, we moved from 7 rate cuts to now 2 rate cuts. And when I say we, it's like we're talking about hedge funds, we talk about Wall Street firms, right? Not a retail investor like you and I. If those guys can't figure this out, why even try? So sorry, James, I don't have any answer for you. And that's the reality. I just don't want to bluff my way out and say, oh, you know what, it's going to give a 2 rate cuts, and I'll give you some BS story behind it. The reality is, I don't know one knows. There are so many, I would say, factors that will go into the decision on rate cut. At the end of it, there are like 7 governors, voting members. I don't even recall. They'll come with a dot plot and they will think, okay, what the rate cut should be. And what makes them to think how the economy is doing? Who knows? I mean, but this is what the state of affair is. We don't even have the real inflation number on which Fed is basing its logic. So I have no idea when the rate cuts will happen. But if you want me to know what the market is thinking about it, we can look at a Fed watch tool and see what the market is thinking about it. So let's see what market thinking when they will get a rate cut. I don't think anything has changed since last week. So nothing's gonna happen in May because 95% are predicting we're gonna stay at 525 to 550 basis points. Market 70% of the market is predicting we're gonna stay at 525 to 550 even in June. July is like half, right? 43% thinks that we're gonna 43% probability that we're not gonna have a rate cut in July. 45% probability that we will have a rate cut in July. So it's kind of neither here nor there. September is the first time when the market is predicting, or the probability is that 44%, which is the highest, that will probably have a 25 basis point cut. So if you want to get an answer on what the thoughts are, maybe the first might come in September. That's what market is currently pricing it. Whether we will have this or not, who knows? And if you go back, I don't think whether you have okay, there is some historical data. Okay, so I've never looked at yet. But anyway, now you can put whatever faith you want to put in these probabilities because they have been wrong even when we have started this year, right? So, but this is what currently market is pricing in in terms of the rate cuts. Chandra, for gold ETF, GLD only or something else? I guess there will be gold. GLD is the biggest one, so that's why I use gold. Let's say VanEck has one. There we go, ETF database list. So you have a GLD, you got an IAU, but which has got 20 years. Oh, IAU is, again, it's a big one, huh? I never realized. Then you got GLDM, this is mini share trust. So there are a bunch. So again, you should look at which one has the least expense ratio. Number two, you should also look at what are they holding, right? Some of them may call themselves a gold ETF, but they may not be holding, let's say, the gold as a precious metal. They might be getting exposure to gold, maybe via having investing in gold miners, right? And the miners, the performance of the miner stock may not always correlate 1:1 with the performance of a gold stock. So first you need to build your thesis of what kind of exposure do you want to gold. If you want to mimic the performance of how the gold is doing, then you should invest in an ETF, which is actually investing in precious metal. Because when you're trying to invest in the miners, other things come into picture, right? If let's say the interest rate continues to stay high, many of the miners may go out of business if they're highly leveraged. That has nothing to do with the gold price. And then you may be wondering, and let's say some of the junior miners, and then you may be wondering, gosh, gold has gone high. Why the junior miners ETF has not performed? Because the miners went out of business. Because the interest rate continues to stay high. So there are additional business risks that come on to, let's say, miners, and that could change how the miner stock will behave. Right? So understand in terms of what kind of exposure you want. In some cases, if the gold go 1% higher, miners could move 2%. So, and based on what kind of exposure you want, then pick up what are the ETF that you want to buy. We will see a major increase in price of oil from interest rate. Not really, right? If interest rates, I don't think these are kind of a correlated. If interest rates goes higher and if we get into recession, if the economy plunges into recession, then we should see less consumption of oil. But I think currently we are seeing why the oil is running high is because of a conflict in Middle East. So again, I don't buy a barrel of oil, let's say XLE. And again, this is not perfect representation of oil, because XLE is like buying miners, right? So this is basically energy companies, like you got a Chevron, you got a ExxonMobil and all that stuff. If you really want, I think the crude oil ETF is the crude oil futures, that's up like 21%. So year over year, XLE is 14%. But if I basically get my energy exposure through a couple of ETFs, XLE, AMLP, no, those are just ripping higher because of geopolitical concerns around Middle East. And that's why the energy is going higher. Pro cons with gold ETF versus physical that we never solve. We just hold for life. I mean, physical gold, the problem is storage. And because it's a physical, it's a bearer instrument. Your house gets broken into and gold is gone, what do you do? And that's why I don't know how to hold the stuff, and then I have to figure out how to store it. Then you go and get a safe deposit box and store it in the bank. What if that a bank get robbed? Who knows? So I don't want to even deal with that physical gold. And physical gold, if you want to, sell it, how do you sell it? You go to a jeweler shop and sell it. Are you gonna get the same price? And if you want to sell it only a portion of your holdings, are you gonna break that physical gold? I mean, the fact that we have what do you call it, tokenized. I consider GLE or these ETFs a little bit a tokenized version of gold. If I want to sell only $100 worth of it, yeah, I'll sell $100 GLD. I can't sell $100 of gold, then I have to break it into tiny pieces, right? So too much big hassle of dealing in a physical gold. So that's why I'm not a big fan of physical gold. Yeah, but if you are a fan of a jewelry, maybe you can get a gold jewelry. I'm not a fan of that either. How about SHNY? What is SHNY? What is SHNY? Is that an ETF?
Yes, it's a leveraged ETF on gold.
Okay, so you know my thoughts on leverage, right? Leverage stuff is not to be held, is not to be inventoried. You want to deal in any leverage stuff? Forget about gold. There are leverage for QQQ, SPY. These to be overnight instrument to hedge your positions, right? Because the gold could continue to go higher, and you may see that your leverage position may not go higher. If there's a volatility in the underlying instrument, that kills these leveraged ETFs. So I don't hold anything. I don't even have even a single instrument which is a leveraged ones. Maximum, if you want to hold leverage, maybe hold it for a week, etc. These are instruments not to be inventoried. These instruments were created for a specific purpose, which is to hedge your overnight risk, to hedge a particular event risk. And once that event is over, we should be out of that. These are not, these ETFs, and I think those who've been attending this session for 4 years, I've been talking in ad nauseum saying many of the retail investors get into these leverage stuff because it sounds great that, hey, if a gold move $1, I can make $3. But what if when you buy this ETF, gold actually goes down 50% and then goes up, dollar up? You're still going to lose money because it went down initially. So volatility kills these leveraged ETFs. If you made money, lucky. But these are not the instruments that needs to be inventoried. These are instruments to be held for very short duration of a time, were created for institutional investors so that I can hedge my exposure. For example, there is a Fed meeting coming up and I have a portfolio of all the tech companies and I want to hedge that position for a day. I'll probably buy an inverse, QQQ to hedge my position. Because if the Fed gonna increase interest rate, my tech stocks will go down, my inverse QQQ will work out. But I'm gonna hedge it only for that particular event. These are the reasons why these instruments were created from a hedging perspective, not for inventorying perspective. So I'm not a fan of any of the leverage products. They have a purpose, so let's use it for that particular purpose. Yield max ETF. Yield max ETF is now doing great because there's a lot of premium coming in the call options, right? But many of but if you just held and yield max ETFs are gather a lot of attention because they are paying you what 9%, 10% dividend and all that stuff. So we looked into these yield max ETFs in one of our previous sessions and say if you just held a stock, you would have made a lot more. Because what you're giving in your yield max, you're getting the dividend return. But you lost on the capital gain return, right? There is no free lunch. In investing, there is no free lunch. So yeah, Jay said, right? It's a fantastic look at overall return. Yeah, look at overall return. So you get a 10% dividend, but you lost on the capital side because your call option, the way they construct these ETFs is they take a synthetic stock position and then they sell a call against the stock position. So we're going to talk about, you could construct a similar strategy. I mean, I've been selling calls against my long position for years now. You could do that for your own portfolio. But if you're happy with 10%, great. Yield max is for you. If you're happy with making 10% on your kind of a dividend income, but then don't see, don't feel bad when your neighbor is making 40% because they held QQQ. Right? So, but yield max and not just yield max ETF, there are a lot of these income generation products that I'm seeing in the markets over last year, because the call premium has gone higher because the interest rates have gone higher. So there is a reason why these ETFs are now coming onto the market. Because the interest rates have gone higher, you're getting more premium on your calls, and then we see a lot of these issuers. These issuers, mint tons of money by charging you a few basis points on these ETFs, and so that's why we're seeing this. Once the interest rates goes back down, then I will wait and see how many of these new instruments coming. So, all right, let's continue. Okay, so I already gave you, okay, this is where it was. I was looking, where's my boot camp details? So I think Wednesdays, I already had maybe around 60 plus folks. Probably gonna be fun. We'll see. Okay, quick look at the market performance. On Friday, if you tuned into CNBC's or Bloomberg or any of financial media, you'll think, gosh, the market has gone down in the dumps, all red, and the host will talk as if the situation is so bad. Despite all that, we are still 9% up year to date. Right? SPY is still up 9%. I would still say it's a great year. Right? There's no reason to complain. And energy is up like 17, almost 17%. Again, the reason is because of the conflict in Middle East. We are thinking that probably may escalate to a war, and anything happening in the Middle East, pushes the energy prices up. So guys, don't complain. Our markets ended up red. Let's look at where, and I didn't pick up this screen. If you pick up this screen for 1 day performance, which is like Friday's performance, is all red. Let's look at a weekly one. 1 week performance. Yeah, mostly red. Few selected stocks have done better, but mostly red. But who cares what happens in a week? I mean, we are still up 9% for the year, and we have got only 3.5 months. If we continue, and again, this is the very bad way of extrapolating something, but if we continue to do like 9% every 3 months, we're gonna end up like 40% for the year. Right? So anyway, so I think still, the market is still returned very handsomely for the year, despite all the doom and gloom that you are seeing in the financial media. Fear and greed index has now returned to neutral. So now I'm interested. So on Friday, I think I posted maybe on Twitter or on the Slack channel saying I'm like a kid in a candy store on Friday, because I've been waiting for some volatility in the market. And when a Friday morning, when I got my coffee and all, and sat on my table, I'm like, what the heck? Why the lot of IV has gone high in many of these stocks. So let's look at, and I sold a lot of premium. XSP, which is your mini, basically SPX, mini version of XPX. Your IVR went up from 40 to 65, like 20%, like 50% jump. I looked at many other ETFs. IYR, real estate was up, XBI. It took a high from 80 to 93. I'm like, this is a good day. This is a good day for me. So I sold a lot of a premium. Right? But I think still I would still not become bullish on the market just yet, because I mean I'll just wait for this index to get into fear, and that's where I'll start to put little more bullish positions. Most of the time I've been just trying to manage the deltas by selling options in the market, and with the fact that on Friday the wall means volatility was so higher, could get a much more juicy premium by selling options. And but I didn't add any more risk. Means most of the positions were delta neutral, means playing on the both sides of the market. As long as it's stays range bound, you're gonna make money. And so no more additional risk, but it was a good day to sell a lot of premium. I would say in this year, that probably would be my top 2 or 3 days of premium selling, which was Friday. So it was a busy day on Friday. Yeah, IV, XLI, IVR 100%. I don't think I sold XLI. There was another one which was like 100%. Well, yeah. So there's, I think, which one, which else I sold? Maybe did I sell XLI? I don't recall. IYR. No, I sold another one which was like 100%. I forgot which one was it. But yeah, many of the ETFs, and forget about individual stock. I mean, ETFs had such a huge volatility. It was a good day to sell some decent premium. Chandler says, I sold most of my recent buys with Iran-Israel war fear, expected correction based on S&P future clearing slow, clearly showing lower lows and lower highs on a day chart. Yeah, I don't look at that. And again, I'm not, even though I've not been bullish, for a few weeks, I'm not selling my position because what do I know? I can't time the market. So all I'm trying to do is using options just to manage my deltas. GLD close to 100%. Yeah, GLD is 100%, but I already have GLD position. So that's I would say it was a good day. Friday was a good day. What else? Anyone else, was watching on Friday? For me, it was a busy Friday. You don't get those days often. But when market presents an opportunity, yeah, I want to take an advantage of that opportunity. Oh, scary? No, not at all.
Why, Vivekji? Because that's the day, because then Iran-Israel war is kind of confirmed, right? With exaggerated news, whatever. I don't know, is it exaggerated also? We don't know. But things go wild from here because we're seeing a lot of bad signs from the like a day charts, whatever is happening, slow down from last 2 3 weeks. And again, this one like Israel war, most of the things are confirmed, right?
Yeah, I mean, if we end up into the war and all that stuff, yeah, it's gonna be bad again, but it'll be a good opportunity to buy that stuff at a cheaper price. Long term, we have seen many wars. Market has seen 2 world wars. We've gone through COVID. We've gone through the 2 wars in Middle East. We'll recover.
I think we are stretched right now. For example, if you're buying anything now, they're already like in the last October to now, it's already peaked most of the prices. So buying this place isn't you have to be holding that heavy bag for years, right?
Yeah, so that's what I'm not again, I still do my regular buying what I have to do because I don't want to time the market. I'm not going right now, I'm not overly bullish on market. And that's what I've been saying for now weeks is, guys, just make sure you keep a check on your portfolio. And I've been keeping, using options to reduce my deltas on portfolio because I'm not overly bullish. But am I bearish and am I gonna sell off? No, I don't want to pay capital gains tax right now. If I were to sell off, I have to pay those gains, and then it means market has to correct at least 35% for me to make sense. The moment I sell off $100, I'm left with $70.
Yeah, good point.
So unless the market corrects 30%, there's no point in me to sell off. I don't think I'm waiting for 30% correction.
Yeah, I
So,
understand your point because yours is like a very quality stocks. I remember one of the stock which is called Bill.com. It went to 300. I did sold. Like now it is less than 100. So
yeah,
when
yeah,
you
yeah.
put that much money, then you feel that 30% is worth to take the risk.
Yeah, yeah. I mean, from individual stock positions, don't worry, you're not the only one. I'm still holding some stocks which are down 80%. But if it is like small portion of my portfolio, why do I care? I mean, I do care about the stock, but it doesn't hurt much. So you're not the only one. I still have some stock because business still doing okay. But that's a lesson that we learn is sometimes valuation does matter. So if it become egregiously expensive, yeah, maybe we can sell off something. But I still hold some stock which are down 80% in my portfolio. And I watch that business quarter after quarter. I'm like, yeah, it's doing fine. Yeah, those stocks got carried away in 2021 euphoria, but business still working fine, so I'll just hold it. All right.
Thanks,
Crypto side Bitcoin halving is less than a week away. Now 6 days, and this again approximate time. It's not based on the clock; it's based on the block height. So every 210,000 blocks, the supply of the Bitcoin will cut in half. The new Bitcoins that are generated as a reward for miners get cut in half. So the next halving approximately is predicted on April 19th, because with every block is getting created on average at 10 minutes. It could be 10 minutes, it could be 15 minutes, it could be 9 minutes. So looking at how many blocks have been mined right now and how many are yet to be mined to get to the 210,000 blocks before which, at which the halving will happen. The approximation is maybe it's another 6 days. So this is a very different, I would say, halving season that I'm witnessing here. Not too much of a chatter around it, which is good. Right? Things happening quietly is always good. When there's too much chatter around it, where there is too much of a euphoria, that's when I start to get a little scary. But whatever, if you're interested or if you've been watching this space, we are 6 days away from halving. And I think yesterday there is some $500 million worth of liquidations happened on BTC, I think across the crypto. Good to buy BTC miners before halving. Please share your thoughts from a previous halving. So I can't say it's a good or bad, but when the way it happens is, and again, it depends on individual miners to miners, right? So I don't think the miners have actually worked out as well as the BTC itself has worked out, right? So there are some miners like, while the BTC year to date is up 60%, this Marathon Digital Holdings, which is one of the big miners, is down 30%. Let's pick up another one, right? Some of the Clear Spark, CLSK, Clean Spark. That's up 36%. Other miners, Riot, it's down 40%. So you see, the miners there are different factors that will play in if you are dealing with a business versus, and these are a lot of Bitcoin miners. Each one having its own, performance, year-to-date performance, whereas Bitcoin is up, what, 30, I don't know, what, like 50%, 60%. Now, what happens after the halving is that when you mint, a block, the miners get rewarded by a generation of a new Bitcoin. Now, by generation of a new Bitcoins today, when a miner solve a block and mint a block, they get 6.5 Bitcoins. After the halving, they'll start to earn whatever the half of it, right? 3.25. Now, If the Bitcoin price doesn't move, that's very bad for miners. Means they will still continue to invest in the infrastructure to have those mining rigs, and now they're getting paid half. But let's say if the Bitcoin price moves, because now we're thinking, oh, institutional investors want to buy in, and because the supply is gonna get reduced in half, it's like new gold that you're trying to get out of the earth crust is gonna cut into half, and you have a FOMO because everyone buying gold will push up the price. In that case, even if you're getting paid half of a bit, half of the early quantity of Bitcoin, but because the price has gone higher, you ended up making more money. So I don't know whether it's a good time to buy before halving or not. It depends on the, what eventually happened to the Bitcoin price. So if you're interested in Bitcoin to get an exposure, now you got an ETF. So just like on a gold, you can get a exposure via gold ETF. There are 10 ETFs on Bitcoin that you can get exposure to. You don't have to go and open an account in Coinbase. Not saying that you should not. If you want to, go ahead and open an account in Coinbase or Kraken or Gemini, buy a Bitcoin directly from them, or just buy an ETF to get an exposure. You don't really need to get an indirect exposure via miners or via MicroStrategy or via Coinbase as a share. They will have their own individual idiosyncrasies, which might diverge their performance from a Bitcoin performance. That's my thought. So what did I buy and sell this week? I shopped a little bit. I bought Mercado Libre, added to my position, a little bit of a Shopify, added to my position. Nothing that has changed. When some of the stocks are down, I would want to buy. I'm training myself to not buy on a green day, not sell on a green day, and buy. Sorry, what am I saying? Not sell on a red day and not buy on a green day. So if the market is red, that's what I want to buy, and the market is green, that's one. If I were to sell, then I'll sell. So some little opportunities. So I picked up some shares of Mercado Libre and Shopify. All right, what else? Do you mind why buy Shop? What are good things from Shop? I mean, I've been holding Shopify. I started building position in Shopify in 2022 when the stock came down to earth. Earlier, I couldn't justify buying it at that valuation, but I mean, it's a great business. That's all I can say. We can look into the details of maybe now we're getting into earnings season. So I'll review Shopify earnings when it comes out. So there you'll see my invested thesis of why I am buying Shopify. Let me see if I can pull that out. Shopify, right? Let's see. What was my last thought on Shopify? Oh, so I didn't look at it after Q3. So Q4, I didn't look at it. So, okay. I looked at I review it. Okay, Q2 beat on GMV. They ended another partnership. Yeah, so I mean, I think I did review Shopify. Maybe I didn't update this document. It's some other document. But anyway, so this next week I will review Shopify once their earnings is out. I like it as a business. And it's not a big position in my portfolio, so I'll build it as and when I get opportunity. All right. Let's continue. Let's ignore this. I just want to make sure we'll come back to this. We have 30 minutes. Today I have to finish at 12. So let's go to the Amazon's CEO letter. Okay. First, let's look at the financials. Shouldn't be surprised. We actually reviewed Amazon's Q4 and the year ending 2023. Revenue is up 12%. Operating income has improved a lot. And 12-month free cash flow is from a negative to now turned positive. So from a financial perspective, 2023 looked great. Only thing I worried is, hey, your overall revenue is growing only at 12%. But imagine the big part of our revenue comes from their retail business, which is a slow growing business, right? Now, and afterwards, then they divide into various segments. So stores, there were major 3 shopping days: Prime, Big Deal, Black Friday, Cyber Monday. They're shipping more than 7 billion items either on the same day or the next day. Delivery cost, for the first time since 2018, did we reduce the delivery cost per unit globally? So Amazon has been doing some good stuff in terms of the managing their warehouses, and they will continue to focus on delivering the, reducing the delivery cost further. That's going to be a focus area in 2024. International, meaningful progress on our emerging geographies, and Mexico became the latest international store to become profitable. Advertising, this is a one big business hidden inside Amazon business, is growing 24% year over year to $47 billion in business. Right? So we started looking at advertising business maybe 2 years, 18 months ago. And just like we looked at a YouTube a few years ago and say, watch YouTube, it's going to be a big business in Google itself. Same is the case with Amazon. Advertising itself is going to be a big business within the umbrella of Amazon. And now it has become like almost $50 billion business in itself. Right? AWS, which is the crown jewel of Amazon, less revenue, all the profits come from AWS. The retail side of the house, they don't make much money. I doubt, I mean, I didn't have the numbers right now, but I doubt that even they actually made any money on the retail side. But the AWS is where their cash generation machine is. So end of 2023, we saw new deals now coming up. Customers are renewing for larger commitments. 2022, 2023, majority of 2023 was cost cutting from most of the customer side. So they saw a lot of optimization and rationalization of the budgets. But now the businesses are looking to spend again. Prime Video, it could become a profitable business in its own right. Right now, they don't make any money on Prime Video, but if they can, and if you're watching Prime Video, you see those ads in it, right? So if they are able to generate, able to have a good content and able to make use of advertising, some point of a time, Prime Video will also become profitable as a standalone business. Project Keeper, that's a new business. I think last time I read about was maybe previous quarter earnings. So this is equivalent to a Starlink of Elon Musk. Basically, they launched satellites to provide broadband connections. So that reached a milestone. They launched 2 end-to-end prototype satellite and make sure that everything is working fine. They are on target to launch first production satellite in 2024. So entirely new business,
Vivek.
individual business under Amazon. Yeah.
Well, I joined Prime mainly for shipping, not because I want shipping, but because I have to join it for some reason. But I stay well for at least 1 month. I stay to watch the videos. There's nothing because I don't really need next day shipping. Anyways, it does come next day or 2 days. Who cares? Yeah, Prime is totally attached to the business, I don't see how it could be a standalone.
No, so what they're talking about is the Prime Video. So today, the Prime Video is just an add-on and on their overall Prime service, and they not make any money through Prime Video. But remember, they also bought MGM studio, right? So they bought the studio so that they can produce the content and not have to pay licensing fee. And if they are able to generate a good content, and people will, because there are some stuff which is available only on Prime Video, like they're also getting exclusive those football games, right? I think it's Thursday or something. So
I think that's going too far from the core.
oh
I don't
yeah,
feel
so
separate.
yeah, so Amazon has moved out from just the retail and has spread it across multiple businesses already.
Excuse me, I'm bringing up a word we learned in undergrad, and that was a long time ago. Sticking to the knitting, and like I said, I only get Prime Video because I have to go like shopping a certain day or something. But I because I don't need next day air. But like I said, they're trying to go too far from the core. You know what I mean? It doesn't seem natural if it
Okay.
goes off it by itself.
So if you looking when I think if you look into the, and I don't have it here, but read through the overall full annual letter. So the principle on which Amazon was founded on, that core principle is still the same. Now, how you deliver those core principles to how do you deliver the value to the customer is now being showing up in a different business line. So I don't think they are deviated from core. And in every annual letter, they also have that annual letter that Jeff Bezos wrote in 1997, still included in 2023 annual letter. And if you read through it, it still looks like they're still sticking to the same principle of great customer experience at the lowest cost of delivery. They started to give the lower cost of delivery on books, then to move on to electronics, then to move on to start selling everything else. But the core principle is still the same: great customer experience, lowest possible cost. They're going to do the same with pharmacy, right? With the healthcare. And some of the things work, some of the things don't work.
Yeah, it's my argument again is it can't be a standalone. It's part of the Amazon experience. Do you
Yeah,
know
yeah.
what
Oh, yeah. That I agree. I'm saying
pharmacy
standalone.
is okay? Pharmacy is selling products, right?
Yeah. So I'm not saying that they'll move it as a standalone business. I'm saying in itself, it'll actually start generating money. That now, if you just look at a Prime Video as a business in itself, what they're focusing on, someday it actually could start to generate money on its own. So that it will not need sponsorship from the other businesses, right? Today, AWS is feeding every other business. But some point of time, each of the other businesses, if they can make money themselves, why not?
On top of it, actually, if they stay in only Amazon, that retail, right? It's not that huge company. They did so many great services and streamlined so much, every delivery process, the
Yeah.
even the warehouses and the even shipping and even the friend, like White House deliveries. There's so much change because the innovation keep happening, right? If you just stick into one thing, it will be like a Walmart because it's not like Walmart, right? Now by video, just a small thing they added and everyone is getting adapted and the advertisement of their own products and extra other products, that's a new revenue and new people buying more stuff. So this is all great stuff actually. Even
Oh,
some
no.
people may not watch, like you said, you might be signed up only for the one thing, but some people sign up for only for Kindle. Some people do that, but thing is you get a mix of everything. That's exactly thing. Yeah.
And the moat is visible because they damn keep on raising the Prime membership charge, and they don't see the decline in the number of members, Prime members, right? So people don't mind paying up for it, right? So and that's the mode right there, that they can actually charge higher for the services.
Yeah, true. And one more thing is even Drive also. Amazon Drive they give, right? Photos, unlimited photos. People like one of the they have 100 things. People like maybe 4 parts of it, and they are part of it.
Yeah,
Some people like something else. Yeah.
true. Anyway, so now Amazon, I mean, again, they talk about primitives, which is more, I would say, management speak for, you can call it a microservice or modules, whatever. But again, from their early days, their focus, and I think we should read that Amazon letter. If you are working a tech firm, it helps you to look at, if you're building a new product, how you should think about product development, right? So when they started building their product and build their e-commerce platform, and then they wanted to bring in others to use their e-commerce platform, let's say Target wasn't able to use it effectively because many of the functions on the e-commerce platform, right, payment, identification, warehouse management, was so tied to the Amazon process that opening it up or onboarding or white labeling it for other customers wasn't feasible. So what they started to do is to develop each of the service as its own standalone, call it module, they call it primitive. You know, if you're from tech, so you might call it as microservice, right? So their focus was, let's build these services, APIs, now getting like application programming interfaces that will do one task, but will do the best. And you start developing those small modules and let the other businesses pick and choose how they want to build a full solution rather than us building a solution. And that's when then they started, breaking their whole e-commerce functionality into payments, into inventory management, into logistics, and even further down into it. And that's once they started doing that, that's where now they started to do the similar thing with AWS. So they said, and if you look through it, he actually talked about a history of how it has helped them to generate or create new lines of businesses. And then the question was, okay, what are the next set of primitives that you guys are focused on? 2024, if you're a tech company, you can not talk about AI. Right. So that he started talking about that what we are focused on, next set of primitives is around whole stack of AI, right? Which means the bottom layer where the developers are building foundational models for AI, they will need a computing power to train the model. And then once the model is trained, you feed in tons of data, and then you get an inference from the model, which is like, look at your question, and they'll be able to give you an answer. So that's an inference process, right? So say at that level, we are building a new chips, custom built AI training chips, Trainium, and inference chip is Inferentia, right? Okay. Today, everyone is using NVIDIA chips. NVIDIA is enjoying so much of fat margins. Like I said, always, your margin is my opportunity. Other companies will get into the business. NVIDIA cannot have these margins for 10, 20 years going on. So keep that in mind if you're NVIDIA shareholders. The margins will be competed away. It's a capitalist society. Unless you have a regulatory moat or if a patented moat, some kind of, otherwise the margins will be competed away. So we are already seeing Amazon building their own chips, Microsoft building their own chips. They did a partnership with Intel for the AI, etc. Google is talking building their own chips because it's so damn expensive to keep buying chips from NVIDIA. So these will be competed on. So they're talking about two chips, Trainium and Inferentia. Now, once you have the chips, and then the other product is SageMaker, which is basically end-to-end service to help developers prepare the data, clean the data, prepare it to run your models and all that stuff. So that's on the bottom layer. And when you say primitive, means these are the services which will be available for developers on AWS. Now come to the middle layer, wherein, hey, I already have a model built out, or I don't want to build my own model. There are models available. OpenAI has a lot of models available. Facebook has got Llama, which is open source Llama 2. Anthropic has got Cloud and Cohere, and there are many of some of these companies who are best at building AI models. I don't want to build my own. I just want to use which is already there in market. So for that, they have Amazon Bedrock, and I see many of the tech companies basically partnering with Amazon to have their services available on Bedrock. So for this is for the customers who just want to select from third-party foundational models, right? Llama, Claude, Stability AI, Cohere, and Amazon also has its own foundational model. But you want to use what you're comfortable using it, let's say open source, you want to use Llama, yeah, Amazon will provide you. And then the top layer is where the applications come. So as a user, as a consumer, we interact with this thing, top layer. This is what we interact with. This is where we will actually see the benefits of AI. Is how is it helping me in doing my work or doing my shopping? How is it making things better for me? And so that's their application. Look at Microsoft Copilot being introduced in Microsoft Office is a consumer-facing application. So this is where Amazon is building some Gen AI applications like Rufus is their shopping assistant. I don't think Amazon has been a lot of success in this one. Now they have Amazon Q, which is their Gen AI powered work assistant. So again, we have to see how much money can they make through this, but I like what is on Q. So essentially, if you are a company who basically, all your IT stuff is on AWS, which means your data is on AWS or some of the other, I would say, SaaS providers like, let's say your computing power you get from AWS, your storage is in S3, AWS, you're using Salesforce for your Salesforce data. For managing your product software development, you're using Atlassian. And for communications, you're using Slack. And for managing your ITIL, internal IT projects, you're using ServiceNow. Amazon Q is what they are focused on their Gen AI agent, which will be able to look through all this data repository and be able to answer your question. Let's say if you answer your questions on, tell me, what should I question be? Looking at my past 5 years of sales, tell me which customer I should focus on in closing the deal for the next quarter, and what kind of internal infrastructure do I need? I just made this up. Okay. So now I'm just thinking, if got an Amazon Q, what is supposed to, it needs to look at my last 5-year, 10-year of data that will be stored in cold storage on S3, right? So let's look at a S3 data, figure out which customer has been most profitable, then see, are there any deals that we have in process? Are there any leads that our sales team has put in around those customers in Salesforce? So they should be able to connect to Salesforce and get the data out. Once we have that data, and you look at what are the things that those customers are need, right? If those customers are looking for a particular solution, do I even have the human resource with those skill sets available? So I'll need to look into my Workday to see the profiles of the engineers that I have, see if they're already working on the projects or not, so that I can get from Atlassian because they're logging their time over there. And so once I'm done with the human resource and look at in terms of software and hardware availability, and I'm looking at the customers who is basically buying, let's say, custom ID solution. Do I need to buy more hardware and software? So I need to connect to my ServiceNow to see, what are all my IT assets are there. and hence give me an answer on it. That'll be amazing, right? So, and again, it was just a made up scenario. Okay, I don't know. But if I were to think about it as a business user, as a business decision maker, I don't have to call up 10 different folks and then hire someone to stitch all these threads together. This is where we will actually start to see the real applications of this Gen AI, which could take human-like questions and then give me a response by looking at different data sets, different systems, stitch it together, and then use intelligence like a human would, and then give me options. So if Amazon Q is really what like this, that's going to be great for a company, right? So then they are saying we are also using Gen AI to enhance Alexa, and basically they're using Gen AI for their own internal process improvements, whether it is improving the advertising capability or adding more customer service stuff, right? Be able to respond to the customers in much more efficient way. Was it, I think, Klarna? Klarna mentioned that they use Gen AI customer service models and were able to replace a couple of hundred, maybe 600 customer service agents. Then the news is a few months old, so I don't recall what the exact number was. But this is where they will start to use this Gen AI to optimize their own internal processes, etc. So that's it. Talked about the next focus will be on AI. How about the future? We are still early. If you think Amazon is now what, $2 trillion company? Amazon, by the way, hit a new all-time high after this letter came out. The annual letter from Andy Jassy came out. It hit 2 trillion. If you think it's already too big, here's the stats. 80% of the world retail market is still in physical stores. Only 20% is happening on e-commerce. From an IT cloud computing, 85% of the IT spend is still on-premise. That's even a bigger opportunity worldwide. So we're just going. We just started, guys. We just started. This is a long road in this market. Now, will it be AWS will be able to capture all the market? Definitely no. We have a competition in Azure, Oracle, Google Cloud, but the fact that that market, the overall addressable market is still very big, means like Jeff Bezos used to say, right? It's day one. It's day one in Amazon. So at Gen AI, maybe the biggest transformation since the internet. Yeah, I'll treat it with a pinch of salt because right now, any company talks about Gen AI, their stock price goes high. So you can put all the euphemisms around it. I'll take that with a pinch of salt. But I think, yeah, it's a good letter to read through. If you have not, spend some time. So that's on Amazon's letter. Can you expand on satellite business? What's the value proposition? What it do for the consumer? Briefly, Amazon's gonna make a lot of money when this 80%, more and more of this 80% retail segment start to move online. And now I think that again, I've not even looked into what that Project Kipper is, but my thought process is if they can enable more and more people to come online, today they may not have access to internet because there are no internet cables being laid off. I mean, this is what even Google tried to do. This is what Starlink is doing, is enabling more people to come online. And if Amazon can provide cheap connectivity through these satellites to bring more and more folks online, will be good for their e-commerce business also. Number two, if they can do it really successfully, maybe they can commercialize and launch satellites for others, like what Starlink is already doing it, right? SpaceX is doing it. Or maybe they launch satellites for others. So very, very early. I won't buy Amazon based on this. This is way early in the cycle. It may pan out, it may not pan out, who knows? Prashant, is it morally right to take away retail business share and force to close small business houses? So Amazon, I don't think that this is maybe factually correct. Many of the small business houses, so while some of the small business houses have been closed, many more small business houses have mushroomed and grown because they can sell on Amazon. So technology always moves the world forward. The shape changes. When we got a cars, all those buggy drivers went out of job. When we got electricity, those candle lighters whose job was to go and light the candles or the tikis every evening went out of job when electricity came in. But would you think the electricity is not good for us? No. Cars have been great for us. But yeah, whenever a new thing comes in, some of the existing business models will be appended, some of the business will close down, and the new business models will emerge. Today, if I have anything to sell, I have a good product, I don't have to care about buying license and or setting up a shop and dealing with the landlord and all that. I can just sell it on Amazon. Look at the distribution, look at the reach that Amazon has provided to me. Now the world is my market. Otherwise, I'm just confined to selling on my local area. Now the world is my market. So there are a lot, it has also given, again, my thing, it has enabled a lot more people to sell goods.
Vivek, U.S. immigration is pardon me, customs is irresponsible because they can't handle the individual boxes like China can. China can tariff our goods like $50 to $100. They have the resources America can't. And no, that is not right. That I don't know, the two companies, Temu and the other one, they should take that away. If they've done it to us, which they have, they used to be Mbox. Anyways, take care.
Yeah, so yeah, that's a loophole. So anyway, last topic. I think we'll do the PayPal is the next meta, maybe in our next session. Let me just finish with the Piper Sandler survey. So Piper Sandler had their annual teen survey, and some of the things that really, if you are a shareholder, we should look into this. So overall, self-reported spending was down 6% year over year. Footwear spending was down, but what was it? It was partially offset by upper income teens. So overall, footwear spending was down. So those who have upper income means can spend more on expensive brands. They spent more, and again, this shows up the inflation. Inflation hurts the poorest the most. The lower economic strata, those are the ones that got hurt the most by inflation. Inflation doesn't hurt those who are making like 300K. They don't care about inflation. Inflation hurts the people who are making 50K. So the lower income spending, average or lower income families, they obviously are cutting down on spending. Upper income luxury brands doesn't matter much. Nike remains the number one favorite brand, but the mind share has started to decrease. So it is showing up in Nike's performance also. Well, the Nike stock is not doing that great. Of course, some of it has to do with China, but few other things is there are other brands that are eating into Nike's business, like Hoka, like New Balance. Now that's gaining mind share among teens. Now these teens are gonna be adults of tomorrow. Today they may be dependent largely on the pocket money or from their parents, but once they start to make earn themselves, many of the teens may be earning, but once they become a self earner adults, the habits will be difficult to change. So if you need to catch the spenders of tomorrow, catch them when they are teens. So that is why this report is important. Among upper income teens, Hoka is still number 3. They didn't mention who's number 1 or 2. But Nike lost 510 bips of mind share year over year. So like 5% people in upper income, they like, they don't like Nike as compared to year over year change. So
excuse me, since you're still here, Nike is a must buy in China for upper income. That's like Apple iPhone. There's no way around it. I mean, there's Nike and there's Apple, and
yes,
that's about it.
yeah, I think this survey, I'll have to check out this survey probably, is it done worldwide or is it US based?
Excuse me, they earn money in China because they could charge high prices. They don't earn that much money because at least I could buy it at very discounted prices.
Yeah, I mean, I've never looked at a Nike as a business, so I don't know. But I know is that China is not doing it. If you heard Nike, I think where did I hear Nike's CEO? He was blaming remote work, saying because of remote work we are not innovating enough. So there he was like talking about innovation. Anyway, let's come back to this. Lululemon is number 2 athletic apparel among the upper income team, but number 1 among the female upper income. Of course, Lululemon's whole it started with the female. Now they are expanding into men's and male athletic wear also. Beauty remains a heightened priority, and the beauty is up like 8% year over year. ELF, or is it pronounced ELF or ELF? It is number 1 cosmetic brand, and I know its stock price has gone through a roof. I'm not even a customer of this, not a consumer of this brand, beauty products, or I'd say any beauty products, but the stock has done great. That's what I know. I don't know. Is it ELF is the stock? Yeah, ELF Beauty. Yeah, stock has done great over, let's say, last one. It was what, at $83. Now, even after this fall, it is still close to $160. So up 100% over past year. It's double over past year. So that continued to have a big dominance. Beauty customers still prefer 85% shopping in store. So Ulta and Sephora, they're a little bit on a VR. Roblox continues to improve. Roblox improved 34%. So looks like teens are back on playing. Then a little bit on a Spotify. 66% of team have used Spotify, which is a little down. What other thing? Celsius. This is an energy drink which has been making a lot of noise or news in Twitter. So looks like a lot of teens they love Celsius. And Goldfish is still the most preferred snack brand. I can tell that. My teens like, Dad, can you get Goldfish? Why do you like Goldfish? So they are not alone. Looks like Goldfish still the worst one. And Invisalign is still their clear choice when it comes to dentistry work. So Align Technologies. I don't know what's the stock, ALGN. Yeah, Align Technologies. Yeah. So yeah, stock probably has gone nowhere in the last 1 year, but looks like teens, they got 88% mind share. Maybe they have a great advertising. So that's on Piper Sandler's teen report. These teens will become a consumers, big spenders of tomorrow. That's why it's good to go through that report. All right, guys, that's it for today. Today I have a hard stop, so I have to plan for something else. So we'll do a PayPal. Is PayPal gonna be next meta next week? And any one last minute question? So again, if you have signed up for the bootcamp, make sure you register for it so that you get a link to join the Zoom meeting. It's gonna happen on Wednesday from 6 p.m. to 8 p.m. Pacific. Apologies for those who are joining from East Coast. Love for you to be there. Maybe have your dinner and post-dinner meeting.
Do you have recordings? I missed the last one.
Yeah, so the recording is up on my website. Yeah, so recording is so I do post the recording on my website. So hold on, let me just pull that out. So it will be there on weekly webinars. Yes. Yeah. So you'll see. Sometimes generally it's like by Monday or Tuesday, I'm able to post it out there. So yeah, it is there last week's. So we have all the recordings are over here. Cool. What is dividend? Not dividend income. Oh, I think that's what earlier Sam was saying. It's actually options bootcamp is that's what he wanted to say. Okay, welcome, Chandra. Shop is at support. Won't it drop more? I didn't even look at whether shop is a support or not. And again, if it drop more, I maybe buy a little more. Nyanka, thank you for you're welcome. How do you know when these reports get posted? And okay. So I said maybe if what I can do is if you're registered on this and I have to set up that discipline, is once I do this, maybe I send an email out saying, hey, I posted it here. Okay. I need to become a little more disciplined. Right now, I don't send any notification, but yeah, check it generally by Tuesday, it will be there. I try to make sure that by Tuesday it is up there. But point taken, I do
Vivek,
a better job by sending an email saying, hey, the video has been uploaded.
Vivek, can you, rather than put numbers, can you put dates of the original video? Because you post about YouTube, but I don't know when they were. I mean,
okay,
like
so
the
on
date.
YouTube, no, so that's where if you look at the image, you'll see it. Otherwise, it says April 6th, means the session was on April 6th. Right, so
Sorry.
yeah, that's where it is. All right, I gotta go. Thank you everyone for your time today. And those who joined it for the first time, hopefully you got some value out of this. We meet here every Saturday, completely optional. Want to join in? Great. We'll love you to have it. We'll love to have you here. If you have any questions or if you have any ideas that what we should talk about, please bring in. Otherwise, I'll keep blabbering based on what I want to talk about, every week. All right, guys. Thanks a lot. Bye-bye. See you next week. Oh, I'll see some of you on the options bootcamp, those who have registered for it.